Hey, what's up, everybody? I am Jason, and you're watching Micro Investor. So, I just want to educate my audience. A lot of people already know this, but if you don't, about compound interest. Compound interest is something that is very important to building wealth. What compound interest basically is it's taking your initial investment, and then with the interest of it, it will continue to pay you interest off of the interest as years go on, and leave you with a higher lump sum of money than what you were putting in. And I also want to make everybody aware that is watching this about inflation. Inflation is between 2 and 3% a year, so the idea of actually just saving your money is actually costing you more money because it's not compounding; it is losing value all the time. The people saying, "Oh, I'll just take my money, I'll put it in the bank and let it grow in interest." That's actually not true. Banks don't actually grow a whole lot. They don't even grow at the rate of inflation. So that is actually a myth. That is not true. The only way your money is going to grow is if you invest that money into something like stocks or bonds. That will compound for you. So for the sake of simplicity, let's say that we found some funds that were paying a return of 9% a year. And that's very easy to find, especially if you're tracking like the S&P. So let's say we put a initial investment of $10,000, and that was all that we were going to invest out of that fund is $10,000. So the first year, if it's growing at 9%, it will make $900. Now the second year, it will grow to $11,881. In the third year, it will grow to $12,950. As you can see, the interest is also compounding, so it's just getting bigger and bigger. Now, for 35 years, that number will equal out to $204,139. So if we were not to put our money and invest it, and instead just saved it, we would have been losing out of that $10,000 between $200 and $300 a year just by leaving it in the bank. And you don't have to have a big lump sum of cash to get something like this going. You can technically just do it with any amount of money, and it will compound. So I always recommend, even so, like if you're 18, to start putting money and investing it, into something that will is known to give a return. And that $10,000 is just an example. You don't need to start with something like $10,000 or even $1,000 to start doing this. Any money's going to compound if you're investing it. So you can basically just throw in money every week, every month, or however you want to do it. And if you were to continue throwing money in as it's compounding, your interest will outweigh what you're putting in a year. It's real cool how it works, and it's definitely something really neat to try. If you if you have a smartphone, just download it in the Apple or the Android store. You can just find a compound calculator on there and play around with it a little bit. All right, so I hope you found this video useful. Please like, share, comment, and subscribe. I have new videos coming out on my channel all the time. Thank you for watching.